Today, we're talking about Caterpillar stock and why it continues to be one of the most fascinating industrial companies in the stock market right now. This is a stock that a lot of long-term investors quietly hold, reinvest dividends from, and rarely talk about until the market reminds everyone just how powerful this business really is. Before we get to the video, if you're new here, my name is Elliot. I make videos about investing, the stock market, and I also share updates on my own portfolio, which is on the Robinhood app. If that sounds like something you'd enjoy, consider subscribing. I upload new videos every 2 weeks. When you think about Caterpillar, you probably picture massive yellow machines digging into the earth, building roads or moving mountains. But behind those machines is a company with global reach, strong pricing power, and a business model that has proven it can survive recessions, commodity cycles, and changing economic conditions. Caterpillar has been around for nearly a century. And over that time, it has built a reputation as a backbone company for construction, energy, and mining around the world. Governments, large corporations, and contractors rely on their equipment because downtime is expensive and reliability matters. When a project costs millions or even billions of dollars, reliability is not an option. It's critical. That level of trust is one of the biggest competitive advantages this company has. Another thing that separates Caterpillar from many competitors is its dealer network. The company has built one of the strongest distribution and service networks in the world. That means customers are not just buying a machine, they are buying long-term support, parts availability, maintenance, and expertise. That creates switching costs. Once a company builds its operations around their equipment, it's not easy to move away from it. Now, let's talk about the stock performance, because this is where things really stand out. Over the last 5 years, Caterpillar stock is up an incredible 282%. That is not a normal return for an industrial company. Many people assume heavy equipment businesses are slow growers, but this performance tells a different story. That 282% gain did not happen because of hype. It happened because earnings grew, margins expanded, cash flow strengthened, management executed. Over the past several years, Caterpillar has focused heavily on operational efficiency and disciplined capital allocation. When demand improved, profits improved. Right now, the dividend yield sits right around 0.78%. That yield may not jump off the screen compared to high yield stocks, but the quality of the dividend matters more than the size. Caterpillar has consistently raised its dividend over time, and those increases are supported by real free cash flow. For long-term investors, dividend growth can be more powerful than a high starting yield. A steady rise in payout compounds over time, especially when dividends are reinvested. That combination of capital appreciation and dividend growth is what has driven total returns for shareholders over the years. Another key part of the story is how management handles economic slowdowns. This is a business that rises and falls with overall economic activity. Caterpillar understands that. During slower periods, management tightens costs, protects margins, and manages inventory carefully. During stronger periods, it scales efficiently and captures operating leverage. That discipline is one of the reasons the company has been able to deliver strong long-term returns. It's also important to understand that not all Caterpillar's revenue comes from selling new machines. A major portion comes from parts, services, and maintenance. Once a machine is sold, it needs ongoing support. That creates recurring revenue and helps smooth results over time. Even when customers delay new purchases, they still need to maintain existing equipment. Looking at the bigger picture, Caterpillar benefits from long-term global trends. Growing populations require more housing and transportation. Energy demand continues to evolve. Mining is essential for critical materials used in technology and manufacturing. These are not short-term trends. They are essential and require heavy machinery. Of course, there are risks. Caterpillar is sensitive to economic cycles, commodity prices, and global trade conditions. If the economy slows, equipment demand can slow with it. Investors need to understand that volatility is part of owning a company like this. The stock won't always move in a straight line. But when you zoom out and look at the long-term chart, patience has historically been rewarded. Investors who focus on the business rather than short-term headlines has benefited from both earning growth and dividend growth over time. When you step back and look at the full picture, Caterpillar stock represents durability, scale, and disciplined management. A company whose stock is up 282% over the last 5 years, pays a growing dividend with a 0.78% yield, and operates a globally trusted brand deserves serious attention from long-term investors. The real question is not whether Caterpillar will face challenges. Every company does. The real question is whether it has the competitive advantage, financial strength, and leadership to navigate those challenges. Based on its history and performance, Caterpillar has shown that it does. For investors building a long-term portfolio, this is the type of company that can quietly compound in the background. It may not always dominate headlines like tech stocks, but steady performance over decades can be incredibly powerful. If you enjoyed this video, make sure to give it a like, subscribe to the channel, and let me know in the comments below. Do you own Caterpillar stock? And what's your thoughts on it? And we'll see you next time.